stocks this week. With the Union budget just around the corner, we'll tell you how you may need to rejig your investment strategy once the budget is announced. We'll do a quick sector scan to help you decide where you should be parking your money and find out what you should be doing with your Unitech stocks. Welcome to All About Stocks. You're watching ET Now. Thank you so much for joining us. Now, the Union budget announcement is less than a week away. We need to now prepare for the change it might bring into our investment portfolios. On this show, we'll help you find the stocks that you should keep an eye out for on budget day, for companies that stand to benefit in the long term from the government's moves and those that stand to lose. My advice, pick up a pen and paper and make a list of the stocks that our guests are going to talk about on this show. Find out if they're in your portfolio right now or if you might want to add them to your portfolio in the coming week. Now, before I bring in my guests on the show, Navneet is here to give us a quick wrap of what happened in the markets this week. Navneet.
Well, it was not a good week for the markets. It was also a truncated week as we had only 4 trading sessions. So towards the end, we did get recovery on Friday where the markets were up by 2%. So for the week, we had Sensex going down by about 0.8% and Nifty was also down by about 0.5%. And if you look at the broader markets, BSE Midcap Index was up by about just close to 1%, but the small cap index was down by about 0.5%. Having a look at some of the index gainers, if you look at gainers for the week, Reliance Power was up by about over 6%. HTL Technologies was also up by about 5.5%, followed by Tata Motors, which was up by about 5% for the week, and Reliance Infra 2 going up by about 4%, followed by JP Associates. And some of the index losers for the week were Hindalco. Basically, it was a metals cap which was entirely under the pressure. So you had Hindalco, Sterlite, SAIL, all these counters were down for the week, followed by BAIL, which was down by about over 6%. GAIL 2 was down by about 5%.
Navneet, also tell us very quickly about that MCX listing. It's the first listing of a stock exchange in India. It also is the first big listing and the most successful listing we've had in 2012. Tell us how those numbers panned out.
Well, we had India's first exchange to list on Friday. MCX, which is the commodities exchange with 82% share in the commodities futures exchange, got listed on Friday. Stellar listing coming in there for MCX as it listed with about 35% gains. But on closing, this stock closed at about 25% because we had retailers and HNI investors who were booking profit towards the end. Remember, the issue got very good response at the IPO level as well because it was subscribed by about 54 times.
Thank you, Navneet. Now, joining us in the studio to help us understand what to expect from the budget and how it possibly might affect our portfolios and our equity investments is Sharmila Joshi, Head of Equities at Fairwealth Securities. Sharmila, thank you so much for joining us on the show. And G. Chokalingam, the Chief Investment Officer at Centrum in his Mumbai office, joining us on the link as well. Mr. Chokalingam, always a pleasure to have you on All About Stocks. Thank you for taking time to join us. I want to start with you, Mr. Chokalingam. Tell us, it's obviously going to be a tightrope walk for the Finance Minister. He has to worry about this massive fiscal deficit. He also has to make sure he doesn't hamper growth while he increases taxes, which will subsequently possibly increase inflation as well. What are your expectations from this budget? Do you expect reform? Do you expect any sort of indication of reform at all?
My expectations are threefold. First of all, the Finance Minister has to perform well in this budget because the next budget, which would come in FY13, is likely to be targeted towards early 2014 election. So there won't be many options for pushing any economic policy measures in the next budget. And therefore, this is the last chance for the present government to push a lot of action-oriented policies on economic front. Therefore, we have a lot of expectations. And second, all of us know the kind of the degrowth in the growth rate happening and also the fiscal consolidation. Therefore, there is definitely an expectation from the government to improve the tax revenues and also provide some sort of concession to particularly infra sector to usher in growth.
I also want to quickly ask you, you talked about an increase of indirect taxes. There's been some talk of general excise duty going up, of larger services, a larger group of services being brought under the umbrella of service tax. Can you tell us what sort of an expectation you have? Do you think it's going to be about 2%, which is what we've heard from a lot of other market voices?
Definitely, there are two types of expectations from service sector. First of all, the fact is that service sector accounts for just about 10% of the total collections in the country, tax collections, whereas service sector accounts for anywhere from 60 to 65% of the GDP. So the time has come for the government to be very aggressive on this front. My expectation is very firmly, I believe that the tax base would be widened, that this entire service sector can be brought under a negative list. They may give some exemption to select 20, 30 services. Otherwise, they may bring under tax net almost the entire service activity. As far as excise duty is concerned, I don't think uniformly it would be increased from 10 to 12% because a lot of industries are under stress. So the wise strategy could be to select certain industries which are already doing well, not impacted very badly by the current deceleration in industrial growth. For those select industries, the minister may increase the excise duty from 10 to 12%.
Shabina, for FMCG right now, if we see that larger general excise duty increase, it would make all of these products more expensive. How do you expect it to affect the industry, and any particular stocks you think are going to take a hit?
Given the fact that ITC had just increased their product prices in anticipation, I think, of the excise duty, possibly they won't get affected too much. And in fact, I think the general expectation is that if this excise duty doesn't come through, hike doesn't come through, then in fact it should be viewed as a positive for FMCG. But yes, I think if the hike comes through, then I think the status doesn't change because they had increased their product prices. So perhaps to that extent, ITC will be less affected. We'll have to see what kind of effect it has on lever. But then lever also has that greater flexibility in passing on price cost as compared to an ITC. I think in ITC you will see that immediately getting reflected. So I would be neutral, as of now on until I hear more about excise duty. But I think the broader expectation is that you won't see it come through for these. So in fact, people have been buying ITC in anticipation of the fact that that this move won't come in, and they've increased prices. So in fact, they will benefit.
For a long-term investor who's watching right now, if I hold ITC, HUL, Marico, any of these stocks in my portfolio, should I be concerned during the budget, or do you think in the long term for these stocks these things will even out?
Absolutely, and I think if you look at ITC and HUL stocks, especially ITC, this is the kind of stock that is actually doubling every 3-4 years, in terms of value. Either, they reward investors. They are either having a bonus issue or, something or the other. So, and I am an ITC shareholder and I have benefited. So, I can say that, that if you are invested in these stocks with a slightly longer horizon of about 3 to 5 years, and in fact, they really reward you.
What are you expecting from the OMC point of view from the budget?
I think that the ideal thing would have been, of course, that if that complete deregulation would have come and if they'd been allowed to really increase prices. Because I think, we are now caught in a situation where when prices actually come down, you don't benefit because, prices are not dropped that fast and that easily. And then when prices start going up again, you're back in the same boat and, you start talking of this increased loss that the government makes.
So from a recommendation point of view, would you go upstream or downstream at this point?
Actually, neither, because I think the way the burden is on ONGC, the minute you see a bigger loss, the burden keeps increasing. Yes, since it's an exploration company and if prices go up, it stands to gain. But I think even that applies, while crude is in a certain range. And if the subsidy just keeps increasing in the manner that it is at the moment, then I really wouldn't go for either. But yes, I think given a choice, then it would have to be a KN or an ONGC that you would look at.
So your recommendation is for now stay away from the entire
Absolutely, largely because the whole pack, largely because it is so government controlled and there is really nothing in your hand.
Alright, so stay away from OMC. Mr. Toklingam, I can slip in one more sector before we have to go into break. I want to ask you about the auto sector. There's been some talk also about an excise duty increase on diesel cars. Do you expect that to come in, and which stocks do you think will be hit by it most?
Since the diesel consumption by passenger car is less than 3% of the total diesel consumption, I think the government, instead of rising the diesel prices, they may raise the excise duty on diesel cars. So, depends on the extent of the rise. If it is more than 30-40% of the existing base excise duty, then M&M could be impacted.
Now, for viewers who are holding that M&M stock right now, would you recommend they continue to hold it? Do you think a company like M&M will be able to ride out this change in the long term?
Definitely. If investors have a time perspective of minimum 1 year, they should hold on to it. Because I have been observing it for more than a decade, the performance of the group. It has got a fantastic management capability, and also it has got a good exposure to tractor business. I always believe that the agri team is going to emerge in a very big way. So they would be able to manage this problem beyond a year.
I have to slip into a quick break. Remember, you can write to us. There's an email ID at the bottom of your screen. Come back on the other side. It's a very interesting discussion. We'll talk about power. We'll talk about cement and capital goods. You don't want to miss that.